Pablo, good to see you. How you doing? How you been? Good evening, Miles. Taft, good to see you. How you doing? How you been? Hello, Miles. Scott, good to see you. How you doing? How you been? Kamal, good to see you, brother. How you doing? How you been? Hi, Miles and CMF. Comatose, good to see you, brother. How you doing? How you been? Good evening, Miles and all CMF. Good to see you, JP. How you doing? How you been? Hi, Miles. Artistic, good to see you. How you doing? Good evening, Professor Miles and the rest of the CMF family. Funky brother, good to see you. How you doing? How you been? So, hi all, good to see you. How you been? The crypto markets have essentially fixed up. You could pretty much say the correction is pretty much done. So is the manipulation. It only lasted one day. I said yesterday's live when people were asking how long do I think this is going to be going on, I said it's either going to take 24 hours or continue on to Monday when the market essentially gets better. Seems like it was only 24 hours, the long-lasting issue. Good evening, Curtis. Good to see you. How you doing? How you been? The crypto markets are picking up once again. Good evening, Miles and CMF family. Funky brother, good to see you. How you doing? How you been? Now, while everyone tunes in one by one, let's go through the intro on tonight's live and what we're going to be talking about. And by that time, everyone's tuned in for the first part of the live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards, where I share the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulation. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As on this live as well, which means if you do have any questions or any statements to make, put it down in the comment section. I'm more than happy to answer any questions you may have. Now, on tonight's live, we're going to be talking about crypto and banking news. We're going to talk about Trump news. We're going to go about essentially the Fed news that's going on right now regarding Trump. We're going to talk about partnership news, investment news, Ripple news, Tether news, Japan news. There's a lot of news to essentially cover on tonight's live, and it's all positive news for the crypto space, to be fairly honest. Now, before we go through the first news on tonight's live, which is regarding the fintech companies and banks, which are slowing down fintech progress, which is something essentially we discussed regarding the 5 banking associations who came forward to stop the progress of essentially Ripple and Circle attaining some sort of charter licensing, banking license, or even a Fed account in essentially Ripple's sense. So we're going to talk about that on the first part of tonight's live. But before we go through that news, let's go to the comment section first, and then we go straight for the first news. So let's see where we're at. We were at here. BullXRP, good evening, family. How's everyone doing? I'm doing great. How you doing, BullXRP? Share the live. Let's go, Scott. I've switched from X now onto YouTube. No problem, funky brother. Scott, let's go. Good evening, Miles and CMF. Orphan, good to see you. How you doing? How you been? Let's go, Scott. Hello, Miles. And CMF. Susie, good to see you. How you doing? How you been? Hi, Miles. What, no, Randy? I have no idea. Miles. Woodhouse, good to see you. How you doing? How you been? Also, just want to say thank you so much to everybody who has already liked this live, retweeted this live, and put a comment outside live on X. We have so far 6 likes and 4 retweets on X. CMF members, if you haven't already liked and retweeted this live, please go and like and retweet this live on X if you're watching this on X right now. And if you're watching this on YouTube, drop a like also. Now, the first news on tonight's live is regarding essentially crypto companies that are trying to turn to banks, and the banks that are trying to essentially stop them by weaponizing the 5 banking associations that essentially sending letters to stop their progress to the OCC. So here it is. Doctor, hi, how you doing? Fintech crypto groups press Trump to protect open banking aimed the bank pushback. Banks, for example, like JP Morgan and essentially other much more smaller banks compared to JP Morgan and the 5 banking associations are frustrated that the crypto space is about to get some sort of banking charter licenses, and companies like Ripple and Circle who will have the ability to essentially operate just like a bank by printing, you could even say as well, with essentially digital stablecoins. And the banks are not happy about this in any sort of a way because they know how difficult it's going to get to compete with companies like Ripple. A coalition of trade groups representing the crypto, fintechs, retail, and restaurant industries are urging President Trump to defend the open banking rules under a so-called legal attack by the nation's largest banks. In a letter that was sent today, organizations including the Blockchain Association, the Crypto Council for Innovation, and the Financial Technology Association claim that the US's most powerful banks are undermining innovation by suing to block the implementation of new open banking rules and imposing essentially stunning new data fees on essentially fintechs and crypto apps. Bloomberg reported on essentially that JP Morgan plans to start charging fintech firms fees for access to their customer bank account data, essentially. According to pricing sheets sent to customers, the fees vary based on how the information is used, with higher charges applied to payment companies. I've said this before and I'll say it again. JP Morgan or any other bank just like JP Morgan out there, the only thing that they have essentially is a massive client base and safety. A bank has safety because you know your money is safe with them. A bank like JP Morgan, you know for a fact, up to a certain extent, they're going to always protect your assets if they're essentially held with JP Morgan. And they have a massive client base. But here comes along a company like Ripple, which is going to be offering you the same services, but at a better rate. And also you can earn by holding essentially digital dollars, something you can't do in fiat. You can, but the yield is ridiculously low. You won't even make anything. Let us be clear, financial data belongs to the American people, not the banks. The letter reads, the freedom to choose financial tools and control one's own data is fundamental to free markets and personal liberty, core American values. The licensings that Ripple and Circle are trying to get through a banking charter, essentially, and Ripple trying to get a Fed account, it's going to open up the doors for companies like Ripple to be able to share data with other banks inside the United States. Customer data also. Yet banks like JP Morgan don't want to share their customer data whatsoever, and if they do, they're going to be charging fintech companies like Ripple a fee for client data, and they're not happy. Of course they wouldn't be. Who would be happy getting essentially paying fees to get customer data from JP Morgan as a fintech company? So that's why the Blockchain Association right now is standing up and saying that the banks are playing dirty and they're not making up room essentially for fintechs to come inside the United States and bring innovation. This also does show you that, essentially the SEC, Gary Gensler, was definitely weaponized by the banking organizations to go after a company like Ripple because they knew Ripple somewhere down the line was going to be an absolute, essentially, a threat to the banking sector. The letter essentially urges Trump administration to file a legal brief by July 29th, asking the courts to affirm that consumers, not banks, own their financial data and have the right to essentially share it with apps of their choice, free of charge. This case outcomes essentially could determine how easily Americans can connect their bank accounts to services like crypto exchanges, stablecoin wallets, and payment apps. Open banking essentially is a framework that lets consumers securely share their financial data with third-party essentially apps through APIs. Proposed in 2022 during Trump's first term, the open banking rule to essentially in the United States was finalized on October 22nd, 2024, granting consumers the right to share their financial data across platforms, a key building block for stablecoins, DeFi apps, and crypto on-ramps. The rule raised the bar for safety and security and established common sense standards that benefited the entire ecosystem, including banks, fintechs, and digital asset firms. It also ensured that innovation inside the US's financial systems was the envy of the world, according to the letter. On the same day the rule was finalized, the Banking Policy Essentially Institute, a trade group representing major banks like JP Morgan Chase, Wells Fargo, and Bank of America, sued essentially to block it, arguing that it posed security risk and unfair essentially burdens. Open banking is already a reality in countries such as the United Kingdom, Brazil, and the European Union. While challenging essentially open banking in the courts, US banks are steadily moving deeper into digital asset sectors right now. In May, for example, 2024, Cointelegraph reported that MasterCard and 10 central US banks, including Wells Fargo, participated in a tokenization pilot that tested out essentially how tokenized bank deposits and US treasuries could be used for near-instant settlements on a shared ledger. On July 15th, JP Morgan filed a US trademark application titled JPMD, a blockchain essentially based stablecoin for institutional settlements. The application details plans to offer a broad range of crypto-related services, including digital asset trading, exchanges, transfers, clearing, and payment processing. Meanwhile, President Trump has become one of the most outspoken crypto supporters among world leaders. He has actively courted the crypto community, and some even believe the crypto lobby was partly responsible for his victory. On July 18th, when signing the Genius Act, Trump said, "I pledged that we would bring back American liberty and leadership and make the United States the crypto capital of the world," and that is what we have done. So, we can clear as day now see who was behind weaponizing the SEC to go after Ripple. There's always been that sense in the back of people's minds. Was it essentially about timing? The Ripples suing with the SEC and Gary Gensler is just all one essentially big play, one theater act, and it's all about timing, coordination. And the other outcome on the table was, well, maybe just the SEC was weaponized to go after Ripple for one particular reason, that Ripple one day was going to become a threat to JP Morgan or any of the banks out there. Whereas clear as day that the people that are trying to stop Ripple and Circle from getting any sort of banking licensings, one of those essentially particular banking associations is backed by JP Morgan. So we can see where essentially people stand. Is JP Morgan and the banking associations going to win this case? No, they have no choice but to essentially let companies like Ripple and Circle be able to compete with them. And they can't essentially charge clients essentially data fees on companies like Ripple, because that's just absolutely ludicrous is what it is. But it does show that the banks are panicking right now. The same banks people thought inside the crypto space and outside the crypto space that the crypto space can never compete with the banking sector. There was a time inside the crypto space that people said Ripple can't compete with JP Morgan, Ripple can't compete with Swift, Ripple can't compete with Morgan Stanley and so on. Well, it seems like these massive banking institutions are panicking right now. That is why they're trying to essentially freeze Ripple and Circle in their footsteps before they get too far. Because if Ripple and Circle were not a threat in any sort of a way to JP Morgan, why slow down their progress? Because they are a threat. Now, Russia is what we're going to talk about next. But before we talk about Russia, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or even comments, put it down inside the comment section. More than happy to help you out. So let's go inside the comment section first before we do go through the next news on tonight's live. And just a quick question, because I saw someone put, Miles, you keep freezing. Right now, everybody who's watching the live on X, am I keep on freezing or can you see me? Put a thumbs up. If you're watching us right now on X, does the screen keep on freeze? Like when I'm talking right now, can you hear me clearly and can you see me clearly? Good evening, Miles, and all CMF. Let's go, Addy. Good to see you. How you doing? How you been? How are you? I'm doing great, Doctor. How are you? What up, Miles and CMF? Ray, good to see you. How you doing? How you been? How's your day been, Miles and CMF? Lena, good to see you. How you doing? How you been? My day's been good, Lena. How's your day been? Miles, you keep freezing. Good on YouTube, Curtis. Let's go. Share the live. Hello, Miles. Hope you're well. T, let's go. Good to see you. How you doing? How you been? Any news on HBro and XLM today, Miles? Not so much, no, to be fairly honest. Good day, Miles and CMF. Mike, good to see you. How you doing? How you been, brother? Congratulations on episode 341 today, Miles. Let's go, Scott. Hi, Miles and CMF. Good to see you as well. George, how you doing? How you been? I was reading some articles today. There was something called More Markets and association to XRP. Do you know much about it? Not direct message. Let me take a look after the live. Hi, Miles and CMF. Golden Dragon. Good to see you. How you doing? How you been? Hi, Miles. What's going on with the case? Why not settle and $20 XRP? The reason why the case is still being settled is it does seem like the SEC is still weaponized to go after Ripple. But they don't have a case to essentially move forward on, so they have no choice but to let go. Today, Hulk Hogan is gone. That is true, yes. RIP Hulk Hogan, massive, essentially, he was an absolute legend in the wrestling scene. Is XRP going to see high prices soon or no? Yes, in my point of view, yes. Not financial advice at all. Miles, I used to go on YouTube and you were coming up now, is have to go onto subscription, look for you, and then I can watch the live. Is only happening to me. Interesting. Not financial advice, just my own thoughts and belief based on my research and readings. XRP may reach $15 soon, So far, so good for me on X and YouTube. Let's go, Scott. And okay, interesting perspective, $15. Why not? All good for me. Let's go, Susie. It's fine. Let's go, Addy. Yeah, all good. Even Miles, Mac. Good to see you. How you doing? How you been? Thank you, Susie, Addy, and Diesel, for letting me know. All good on my end. Let's go, JP as well. Just the usual shadow banning. Not bad. Freezing though. Okay. Good on my end. Let's go, Scott. You haven't frozen once. Maybe person saying is dial-up connection. Video and audio good. Let's go, Curtis. Hello, Mike. Good to see you, brother. How you doing? How you been? Scott, let's go as well. By the way, once again, CMF members, if you haven't already liked and retweeted this live, please like and retweet it. Now, why is the SEC still acting like a bunch of fools if Trump is all in on crypto? Well, they shouldn't be, to be fairly honest, but there's something going on there. Do you think there will be another bull cycle? Yes, Mac, I do believe, because it hasn't even technically started. We just got regulations and we got essentially new highs for quite a bit of crypto projects. Let's not forget the Clarity Act and the Anti-CBDC Act technically still needs to go through the Senate for a set of votes also. Once those pass, then we'll see essentially more upside on the crypto market space. We're going to get those essentially passed very soon as well, because the first set of votes passed and nobody's going to say no to Trump. So you know that they're going to be passed quite easily actually and fast. So are we going to get another cycle? Yes, because the cycle hasn't technically ended. I know we had 1 day of downside inside the crypto space, but that's because quite a bit of manipulation and some correction going on as well. Everything seemed very coordinated. If you put all the charts next to each other, it looked like a photocopy. Honestly, the amount of bot trading that's going on inside the crypto space is absolutely ridiculous. If stock market essentially was with crypto market and banks and institutions adopt crypto, doesn't it make sense for the crypto market to then move with the stock market? No. Well, here's the thing. Because crypto isn't stocks. There's a difference between stocks and cryptocurrencies, which is crypto has utility, stocks don't. So stocks can only go up and down in value based on essentially that particular company. So if NVIDIA essentially comes out with this new AI model, essentially graphic card, then essentially their stocks will go higher. In terms of essentially projects like XRP, XLM, XDC, Solana, and so on, it depends on their utility. So they don't really operate like stocks. It depends what they bring to the table and essentially their backbone, how much licenses they have. So they shouldn't be technically following each other unless essentially they have no capabilities whatsoever as a utility. If a crypto project has no utility, it makes sense for it to move like a stock up, essentially buy, sell, buy, sell. But if we get the Clarity Act in, then there's a clear definition of what is a security, what is a commodity. Everybody can move on. So can the crypto space. And then it shouldn't be reacting like a stock anymore. It should be reacting in terms of their utility that they bring to the table. Let's go XRP, XDC, XLM, HBAR, and ACH. Roll the tide. Let's go, Scott. Hi, Miles and CMF. Stormy, good to see you. How you doing? How you been? But Mac, great question, because probably a lot of people wanted to know about that regarding essentially the relevance between the stocks and the crypto market. And Bitcoin does follow essentially the stock market. Sometimes it moves like a tech stock. So the tech stocks are doing good, Bitcoin is doing good. Sometimes if the tech stocks are doing bad, Bitcoin is doing bad. But that's a sometimes type of situation. Also, sometimes Bitcoin reacts like a safe haven and sometimes it doesn't. But this is why I mean the faster we get essentially regulations passed, the faster we can go into that decoupling situation, that we can move away from whatever Bitcoin's next footsteps are. Nobody would care less depending on what crypto projects you hold. Now, Russia. It's not just the United States that's trying to pass regulations and move forward inside the crypto space. Russia is also trying to compete in this sector too. So here is some news from Russia. Russia greenlights mutual funds to offer crypto investments. The Central Bank of Russia today made the announcement that it intends to allow the establishment of mutual funds that will offer Russian investors another avenue to crypto assets. A high-ranking official of the Monetary Authority from Russia has made it clear that the banks that is going to discuss the matter with essentially the market participants in responses to their request. The main financial regulator of the Russian Federation plans to consider permitting and management companies to create mutual investment funds for qualified crypto investors. The Russian business news agency Prime reported, quoting one of its executives, "The Central Bank of Russia will discuss this possibility with market players who have been essentially demanding such an arrangement," said essentially Olga, the director of the bank's essentially Department of Investment Financial Intermediaries. During a conference in Russia organized by Russian National Association of Securities Markets participants, they remarked, We have heard exactly the same ideas from the brokerage community, and they have received this opportunity. This year come with a significant change in the Banks of Russia's conservative approach to cryptocurrencies. In March, the authority proposed to permit coin trading under experimental legal regimes. In May, it issued a circular authorizing financial firms to offer crypto derivatives to highly qualified investors, although warned against direct investments in riskier assets. While reporting earlier this month that the investments in Russian Bitcoin futures reached $16 million in the first essentially few weeks of trading between June 4th and June 27th, the CBR didn't miss the opportunity to note that despite their increases, the volume has been minimal. We see that investors have not reacted strongly yet, and this essentially hype is greater among financial institutions than among investors you are counting on. They also made a comment of, therefore, of course, we will think in this direction, but it seems to us that there is still not the main problem when it comes to the lack of investment strategies in the collective investment market. She added, speaking of the proposal to set up mutual funds for crypto investors. Olga also went on to say, despite essentially also recent estimates revealing that Russians already hold more than $25 billion worth of crypto, their country's central bank remains opposed to providing even qualified investors with direct access to underlying assets of legalized derivatives. In general, we have had discussions and made essentially decisions that these crypto-based instruments are acceptable for qualified essentially investors, noted Olga. She explained that the situation with the asset management companies is a bit different, and a simple circular won't be enough to change it. Amending existing regulations will be needed to allow them to create their mutual funds for crypto investments. The CBR executive clarified, speaking to the media on the sidelines of the collective essentially investment market 2025 conference. Olga admitted, however, that this is more likely to happen by 2026. With the Bank of Russia's next annual regulatory plan, the authority won't be able to update the current one, which was approved essentially and published at the beginning of the year. The CBR representative concluded with this, unfortunately, we don't have the opportunity to expand this plan. Therefore, we will return to this discussion with the markets next year. 2026 is bringing other changes to Russia's crypto space as well. The central bank will start introducing its digital route from September in parallel with the new universal QR codes for payments. Russia will have CBDCs September onwards. At the same time, fines will be imposed for using Bitcoin and will likely essentially to pay for goods and services outside of the ELAR frameworks, currently reserved primarily for cross-border essentially settlements in foreign trade Western sanctions. Key difference is wires helps also crypto bans break through and dominate headlines fast. So Russia central bank still on the idea of central CBDCs only. Russian high-profile investors and institutions want to be involved inside the crypto space. So, Russian government has decided to create some sort of portfolio that the high-profile investors and Russian institutions can jump into to buy crypto and bring liquidity for us. Russian central bank is only doing CBDCs and they're not opening their doors to cryptocurrencies whatsoever. And they're still bringing up their CBDCs in September. All in all, good news regarding how much money Russia could bring to the table in terms of liquidity. And I'm guessing if the Russian investors, high-profile investors, want to be involved inside the crypto space, they're most likely going to be going for the top 10 or top 20 crypto projects, nothing below that. Now, new data has come out. And the new data was, you could say, somewhat of a shock to some analytics. So here it is. US jobless claims drops to 217,000, beating the forecast right now. The US Department of Labor reported 217,000 initial jobless claims this week, beating expectations of 227,000 and down from the previous 221,000. This unexpected drop signals a still resilient labor market, even amid the ongoing economic uncertainties and rate hike concerns. If the US economy is doing good, then we're all good, the simplest way to put it. As the International Monetary Fund put it best, if the American markets sneeze, the world market catches a cold. So if the American markets are doing good, then everybody else is okay too. Strong labor data often boosts investor confidence in the broader economy. Fewer unemployment claims suggest companies are holding onto workers, which can support consumer spending and growth. The market often reacts swiftly to job data, and this report may influence short-term movements in both traditional and crypto markets. You could even say the crypto markets are essentially doing better today due to the reports that came out also from the United States regarding the jobless reports. Lower jobless claims could strengthen the case for a soft landing for the US economy and reducing immediate fears of recession. However, strong labor data might also prompt the Federal Reserve to maintain a hawkish stance on interest rates. Higher interest rates typically dampen risk assessed, essentially including cryptocurrencies, as borrowing costs rise and liquidity tightens. For crypto investors, jobless claims data like this adds another layer of complexities. While strong labor numbers can support a bullish narrative, the potential for delayed rate cuts might cause a short-term volatility inside of crypto prices. Traders should keep an eye on the upcoming economic reports, Fed comments, and how the Bitcoin and altcoins react to broader macroeconomic shifts. As always, it's important to balance bullish sentiments with a smart risk management. Facts. I stand by that 100%. Honestly, the reports came out from the United States. Is the United States market space doing good or bad? Seems like good for the time being. And everything that Trump has done so far has all been for the better United States that's essentially happening right now. But again, CNBC, Yahoo News, and essentially NBC News and ABC News and The View will tell the United States citizens that Trump is ruining in America with his policies and his campaigns and his partnerships and his tariffs. But the reality of it is, there are actually less jobless people inside the United States. Labor markets are actually quite strong inside the United States. There are more partnerships happening for the United States than ever before. In fact, in the past, the United States was handing out money, but in Trump's time, the United States is receiving money. Think about that one. Simplest way to put it. I'm talking about their recent partnerships also. Now, Japan is what we're going to talk about next. Before we talk about Japan, let's go inside the comment section first, and then we go straight into the Japanese news. It's crypto related, as always. Let's go inside the comment section first. Let's see where we're at. We were at here. I think the institutions are doing some behind the door scenes, actions and causing retailers to get out. What do you think, Mouse? I do believe that up to a certain extent, yes. Institutions will always manipulate the market space. Banks will also always manipulate the market space too. I mean, we could clearly see that with the 5 banking associations that are trying to slow down the progress of Ripple and Circle from getting banking licenses. So, and then also trying to charge Ripple fees and Circle fees for sharing their banking, essentially customer details, which is ridiculous to even think about this. So yes, the idea that banks and institutions have a hand in essentially, manipulating the market space. Yes, 100%. Wall Street has always been manipulating the market space for the longest time. Every market space does. That's just what they do. Bankers, brokerage firms, that's their gig on manipulating the market space. Now, the retail also play a hand in this whole section too, because the retail believe anything that comes out the banker's mouth, or essentially they panic sell. I've always said this and I'll say it again. Sometimes the banks and institutions don't need to push the retail out because the retail just tend to push themselves out. In other words, when a bank and an institution buys an asset, they hold it for minimum 5 years or 10 years or 20 years, depending on what they're essentially holding. The retail section will buy something and jump out of it in the next month or in the next year or the next 2 years. And that's what I mean by sometimes the retail section just push themselves out. And that's why the banks and institutions will always be 10 steps ahead, because they're thinking 10 years ahead, 20 years ahead, while the retail section is thinking about next year. Not everybody thinks that inside the retail section. Just want to put that out there as well. There's an incredible amount of intelligent people inside the retail section that don't think like that don't think about just about next year or next month, that they do care about their next 5 years or 10 years or 20 years down the line. But unfortunately, the majority of the retail section doesn't think like that. And that's why, why I say the retail section tends to push themselves up. And that's why the institutions and banks are always going to be 10 steps ahead, because they're always thinking 10 years ahead, to be fairly honest. Now, let's go XRP, XDC, XLM, H4, and ACH. Roll the tide, roll. Let's go, Scott. Hi, Miles, CMF, Stormy, good to see you. How you doing? How you been? I read Scott's question regarding banks. Yep. You always make sense and give good clarity and understanding. Let's go, Mac. No problem. Anytime, brother. Hello, my friend. Let's go, Scott. Thoughts, Miles? Vert launches blockchain credit platform on XRP Ledger of $130 million in tokenized origin business issuance. True. Very true. And I also shared that news on yesterday's live. Episode 340 of the CMF Live was yesterday. If anybody hasn't seen that episode, go and tune in. Watch the last episode I did yesterday. And by the way, if you watch this for the first time ever, this is the CMF Live show, episode 341. This airs Monday to Friday live, as it is as always, Monday to Friday, 10 p.m. London time onwards. But yeah, excellent news regarding the essentially Vert, the Brazilian firm essentially launching tokenized essentially assets on the XRP ledger, bringing quite a, I mean, they have 20%, the numbers were 20% of essentially Brazil's domestic gross technically goes through that company. So, which is, you know, humongous to think about, as, you know, chosen the XRP ledger. And they said they're going to use the side EVM chain on the XRP ledger to have, you know, capabilities of smart contracts for Ethereum. Some could say they could have just used Ethereum for tokenization and didn't have to go through a sidechain on the XRP ledger for Ethereum, you know, smart contracts. But the reason why they chose to go for the XRP ledger, and then if they want to do smart contracts, they just go through the EVM, is because the XRP ledger is just better than Ethereum. And facts are facts. It's faster, it's better. I mean, it's just better in every way. Cheaper. Now, it doesn't get congested the way Ethereum does. Now, let's see where else we were at. So we were at Share the Live. Let's go, Scott. Facts. Hi, Miles. How are you? Peg. Good to see you. How are you doing, Peg? How you been? Miles, you're a G. Let's go, Taft. Thank you so much. You too, brother. Good evening, Miles and CMF. Free and Faber. Good to see you. How you doing? How you been? Manny, good evening. Good to see you. How you doing? How you been? Good evening, Miles. How you doing? I'm doing great. Candy, good to see you. How you doing? How you been? And then there's one moron that just put, did you eat Jesus? First of all, where I stand in terms of religion has nothing to do with you. Second of all, don't ever in your entire lifetime disrespect someone else's religion or someone else's beliefs, because that is incorrect to do. So for the moron that put, did you eat Jesus? Don't ever disrespect anyone's religion or anyone's beliefs. And it just shows your level of IQ, which is none. Now, CMF members, please spam the chat with rocket emojis and thumbs up emojis so we don't have to see that moron's comment as the first comment anybody that comes into this live. Just spam the chat, CMF members, with thumbs up emojis, fire emojis, rocket emojis, so that's not the first comment anybody gets to see when they come into this live. Don't ever disrespect Jesus again. Now, I already did it. I already blocked him, but I can't remove his comment. That's the thing. That's why I say just spam the chat with thumbs up and like rocket emojis and whatever you want. Now, Japanese AI firms is what we're going to talk about next. Japanese AI firm to buy $356 million in Bitcoin. So a Japanese firm has come out and said that they want to jump on the bandwagon of creating some sort of a crypto portfolio. And first purchase, Bitcoin. Japanese artificial intelligence firm Quantum has secured plans, essentially, and announced plans to purchase $356 million worth of Bitcoin over the next 12 months. This significant move highlights the increasing interest from tech companies in acquiring digital assets as a part of their essentially treasury strategy. Quantum's decision reflects a broader trend where corporations across the globe are diversifying into Bitcoin, not just for potential profits, but also to hedge against inflation and current, essentially, currency risk situations that are going on right now. Following its footsteps of companies like MicroStrategy and Tether, Quantum's investment could mark a turning point in Japan's corporate, essentially, approach to cryptocurrencies. The announcement comes at a time when institutional adoption is growing and Bitcoin is once again recognized as digital gold. Quantum's gradual accumulation over the years suggests a long-term belief in Bitcoin's value and staying in power. Japan has long been seen as a crypto-friendly nation with clear regulations and active exchanges. A major Japanese tech player entering the Bitcoin market could influence other regional firms to consider similar strategies, boosting demand and potentially price action in the medium to long term. With Quantum's bold move, Japan may signal the beginning of a new wave of corporate Bitcoin adoption in Asia. If more companies follow suit, this could add fuel to the next big major essentially bull run in progress, slowly at first and then all at once. So another Japanese company has came forward, or another company has came forward, decided to jump on the bandwagon of Bitcoin. following MicroStrategy's footsteps, even though they claim they're not following MicroStrategy's footsteps, but that's what it also seems like. Any company that essentially creates a Bitcoin portfolio, a public company especially, they're just following MicroStrategy's footsteps in a sense. They're bringing quite a lot of money to the table, $356 million to buy Bitcoin. Great amount. Now, moving on from the Japanese essentially firm that's bringing money to the table for Bitcoin, which also is positive for the rest of the crypto space as well, because it brings more eyes onto the crypto space. And we get companies like, for example, out of Brazil, who's now investing into the XRP ledger. Just saying, just because they're investing into Bitcoin, it doesn't mean that it's not beneficial for the rest of the crypto space also, because it is beneficial. It brings more eyes on the crypto space when any institution out there decides to jump on the crypto space. Any token it may be, it brings eyes for the rest of the crypto space. Now, it gives that sense of legitimacy. India is what we're going to talk about next. So, moving off Japan and talking about India now. India has created something that most people would not like inside the crypto space, which is an AI that can somehow track if you haven't paid your taxes inside the crypto space. So first we had South Korea about 6 months ago create something that can track people if they haven't paid their crypto taxes through their phone numbers, which was an interesting one. Now, India is the newest one to essentially introduce a software that can find out if someone hasn't paid their crypto taxes in India. India deploys AI international data sharing to track crypto tax evaders. If you're thinking to yourself, well, you might be living somewhere else, what's the relevance to you? Well, these types of tools that came out of South Korea to track your crypto taxes, or the software now came out of India to track your crypto taxes, could be implemented in other G20 countries, which most likely people who are watching this live right now live inside of G20 countries. India's Central Board of Directors Taxes is using artificial intelligence and cross-border data sharing to identify cryptocurrency tax evaders through the OECD Crypto Asset Reporting Framework. CBDT Chairman Ravi confirmed access to over 6.5 billion domestic digital transactions and automatic sharing of crypto tax data between countries, because it's very difficult for humans to be sitting behind a computer and finding out and tracking all of your data to see if you're not paying your crypto taxes in terms of transactions. There are about 6.5 billion transactions. So they introduced AI to track your transactions and find out if you haven't paid your crypto taxes. The income tax report data essentially uses AI to match tax deducted at the source data from crypto exchanges with individual income tax returns, issuing notices for exceeding 1,200. India has collected 818 million in crypto taxes since implementing its 30% flat rate tax rate and 1% transactions deductions in 2022. The government collected 325 million in the first year and 525 million in 2023. 24-hour, essentially, the new tax regime begins. Digital wallet access is only permitted during official search and survey operations like tax income rates to balance enforcements with user privacy protections. So somewhere down the line, your governments in your G20 countries might introduce something similar to what India has introduced by using AI technology to track your every single transactions to find out if you have really lost your crypto wallet in a boating accident or is actually in a car accident or something else. Because I know if most people will probably just try to claim that they might have lost their crypto wallets on a boating accident or on a Miami trip or on a Dubai trip. But using AI, they'll be able to track every single one of your transactions and somehow pinpoint it back to you. And then they'll find out if you have really paid your crypto taxes or not. Let's not forget, people, we are going to be living in a digital world, which means every single one of your footsteps will be tracked digitally. You're going to leave a digital footprint everywhere you go. Now, Brazil. Sorry, not Brazil. BlackRock. I don't know why I said Brazil. BlackRock. BlackRock's ETH ETF becomes the third fastest ETF to hit essentially $10 billion. BlackRock's US-listed Ethereum ETF is now among the fastest-growing funds in history. Bloomberg CMF ETF analyst Eric disclosed this, noting that BlackRock's iShares Ethereum Trust has passed $10 billion in assets. According to essentially Eric, the ETH ETF is the third fastest ETF to hit $10 billion mark, coming behind the two spot Bitcoin ETFs, BlackRock's IBIT and Fidelity's also FBTC. It took ETH 251 days to hit that mark compared to Bitcoin, which took 34 days and 53 days for the FBTC. Interestingly, $5 billion of assets under management for ETH entered just in 10 days in what essentially Eric described as ETF assets equivalent of a God candle, a term used by analysts to describe a massive increase of price tokens. I just want to point something out. This raises a bit of a suspicion for me because we just had this Genius Act pass. It reaches Trump's desk. He signs it, all good. What happens next? XRP starts flying through. We're about to get the Clarity Act also, which is going to help XRP quite a bit as well, because it's the definition of commodities or securities. The rules that are being passed inside the United States are going to give XRP an edge. It's also going to give Ripple an edge. And Ripple's also applying for essentially a banking license charter and a Fed master account. Here's the thing. JP Morgan, in my point of view, when it weaponized the SEC under Gary Gensler to go after Ripple, is because, as I said, they knew Ripple was going to be a threat one day. That's why they weaponized the SEC and Gary Gensler to go after essentially Ripple and slow down their progress. At the same time, while Ripple was being slowed down inside the United States, they obviously expanded abroad. Good on Ripple. But at the same time, JP Morgan created its own chain on ETH, basically. Now, JP Morgan doesn't like Ripple. It's very obvious because they know that Ripple is going to become their biggest competitor once they get a license. We can already tell that from one of those banking associations, who is essentially JP Morgan that's behind them, who's trying to, again, slow down Ripple's progress on getting a banking charter license, and even Circle's, but mostly Ripple's, because Ripple's also trying to get a Fed account. So I find it extremely odd that Ethereum's ETF has been doing tremendously horrendous. Honestly, since the day Ethereum ETFs were created, they have been doing tremendously horrendous in terms of inflows compared to Bitcoin ETFs. You fast forward to the Genius Act passing, Ripple applying for a banking license, XRP shooting up, breaking its record, its previous record. And then somehow in 10 days, you get $5 billion like that entering Ethereum ETFs. Bit odd. Slightly odd. It doesn't add up. Why didn't that amount of money enter Ethereum ETFs since the day it was created until now? From the day it was created until now, it's just been absolutely horrendous. The moment Ethereum ETFs were created, everybody thought Ethereum ETFs are going to go through the roof. Ethereum's going to go through the roof. The same way Bitcoin went through the roof, but it didn't. And then you fast forward all the way to now, where Ripple applied for a banking license, the Genius Act passes, XRP goes through its previous targets, and somehow 5 billion enters Ethereum ETFs, which ironically is essentially what JP Morgan has built on, while slowing down Ripple's progress through the SEC, weaponizing to go after Ripple, and then again trying to slow down Ripple's progress by going through the banking association to tell the OCC to not give Ripple a license or Circle a license. All of this seems a bit manipulated coordination, is what I would call it. So with the move, ETH has been in that, because they know XRP is going to absolutely obliterate Ethereum. I'll tell you what, Morgan Stanley said, if XRP gets an ETF, it will do better than Ethereum ETFs. And again, that scares JP Morgan. Every footstep Ripple takes on trying to expand its footprint inside the United States, JP Morgan is shivering right now. Every step it takes. Because if it isn't, then why has essentially JP Morgan, behind those banking associations, stopped the progress of Ripple? Why is JP Morgan coming out and saying, we're going to charge fintech companies who want to, be on the same sector as banks, we're going to charge them for client data? Why? Why are you trying to slow down Ripple's progress every step you take? Because you're threatened by them. That's why. So I just find it extremely odd that Ethereum ETFs have done absolutely horrendous since the day they were created until now. And then somehow, last minute, now that Ripple has got getting a banking license, Genius Act passed, Clarity Act on its way for a second round of voting, and so on, which puts a definition of essentially commodities or essentially securities. And we have the case that's about to be dropped. Somehow $5 billion instantly enters into essentially Ethereum ETFs, which is ironically what JP Morgan stands behind, more than it does behind Bitcoin. With the move, ETH has been in the top 5 ETFs for net inflows because of this. For the past month and weeks, this highlights the drastic change in Ethereum's routine. Even Eric, who is a Bloomberg ETF specialist analyst, is like, hang on a minute, this is wild. Ethereum ETFs have done nothing. And then suddenly, 10 days into that Genius Act and so on, 5 billion enters. Where from? While Bitcoin spot ETFs dominated investor attentions in the first half of the year, recent market activity shows that things are warming up in other sectors now. I wonder why. The ETF's breakthroughs comes as Ethereum's market sentiment improves. All of a sudden, the market sentiment for Ethereum essentially all of a sudden improves out of thin air. Prices have risen recently, with ETH gaining more than 50% in the past week and approximately 105% since mid-May. On the other hand, Bitcoin has only seen 24% increase on the same period of the last 30 days. Meanwhile, the performance of BlackRock's ETH has spilled over to other Ethereum ETF products also. The product has now have 14 days of consecutive inflows, starting essentially from July 3rd, during which essentially the products pulled in around $4 billion in assets under management. The period essentially also saw ETH ETFs set net essentially records for daily inflows, with the products pulling in $726.74 million on July 16th, marking the largest day of inflows since the debut. The second largest and third largest happened within this period, with $602 million entering on July essentially 17th and $533.8 million on July 22nd. All of this is in the time frame of what? The crypto week. But a Genius Act passing has no relevance to Ethereum. You could say it has relevance to USDT or USDC. That's why Ethereum's going up. But the numbers still don't add up. They never saw that passing. Ethereum, while ETH ETFs are essentially commending inflows, Bitcoin ETFs have been struggling for the past few days, with 3 consecutive days of outflows this week. Although the outflows are relatively minimal, because they really are, they highlight changes in market sentiments towards ETH ETFs and the underlying asset itself. We also know for a fact that what's about to happen next is essentially XRP ETFs, Solana ETFs, XLM ETFs, HBAR ETFs. There's a load of ETFs, AVAX ETFs that's be happening as well. And it's going to get very difficult for Ethereum to be essentially be competitive in any sort of a way. And isn't it odd that the SEC approves a grayscale basket of cryptocurrency ETFs, last second says, no, let's pause it? Isn't it odd that essentially the SEC approves a bitwise cryptocurrency basket of ETFs and then last second goes, no? It's all a bit odd. The question remains, is the SEC still weaponized against other crypto projects? And does ETH also have a hand behind this weaponization? Meanwhile, the consistent positive flows for Ethereum ETFs had essentially positive impacts on Ethereum itself. With recent gains, ETH is back above 3,700 after over $41 billion in trading volumes over the past 24 hours. It also has increased ETH's dominance to 11.52%, even though Bitcoin is back to over 60% dominance. The asset price ratio versus Bitcoin increased 2.65% in the past day as well, showing that it is outperforming the flagship asset. The SEC, by the way, has no response on why they keep on pausing these ETFs. Interestingly, institutional interest is not the only driver of ETH's price. The network is also seeing a surge in on-chain activity. According to essentially GrowthPie data, Ethereum mainnet added $500 million in stablecoins on essentially July 23rd, and its daily transaction count recently hit 24.69 million at an all-time high. Well, we know why Ethereum has a tremendous amount of stablecoin money inside of it, because USDT keeps on printing it out of thin air. And I'll talk more about USDT a little bit later on tonight's live, because we have some information that's came out regarding USDT and its transparency issues. All this is happening with the 10-year anniversary of Ethereum's network being only a few days away, and many expect more milestones for the network in the coming days. I just find it very odd, honestly, that Ethereum ETFs did absolutely horrendous. Somehow, when Ripple applies to our banking license, we get the Genius Act passed, the Clarity Act next pretty much for the signing, and so is the Anti-CBDC Act. But they're all beneficial for Ripple and Ripple's licensings and banking charters and Fed accounts and XRP breaking its previous record. And at that particular time and moment, Ethereum gets 5 billion entered into it. Bit odd. Once you look at who has been using Ethereum to build upon to compete with Ripple. Now, moving on from that to Societe Generale to provide liquidity for 21 shares crypto ETFs. This is incredible news. So, Societe Generale, Societe Generale has strictly partnered with cryptocurrency asset manager 21 shares to provide liquidity for its crypto-based ETPs in the European market space. Ultimately, this is a step towards expanding institutional access to this type of liquidity in Europe. 21 shares recently announced the news, noting essentially that this is an opportunity to enhance liquidity across its ETPs on fund platforms for investors in both Germany and Eastern Europe. As a part of his partner, Societe Generale, which has a stellar reputation with ETPs, will provide support for trading of 21 shares, Bitcoin, and Ethereum ETPs, including also ABTC, CBDC, CBTC, AETH, and also CETH. In other words, the European banking giant will be a market maker and liquidity provider in this partnership. Precisely, its core responsibility would be to provide over-the-counter liquidity on key fund platforms in the region mentioned above. Initially, these platforms are operated by major financial institutions, serving as a critical infrastructure, especially for institutional trading. This strict approach that expands 21 shares flagship crypto products to a broader base of professional investors. Alistair, the global head of capital markets at the EMEA Investments at 21 shares, acknowledged the company's thrill at having Societe Generale on board for this initiative. Societe Generale also does not overlook the importance of this partnership to its ecosystem. The head of the ETF sales trading UK at Societe Generale described it as a significant milestone in the company's commitment to providing such innovative liquidity solutions. Aside from this deal, Societe Generale has been scouting for blockchain-based partnerships and investments to engage with. Last September, the banking giant partnered with Bitpanda, which is also a Ripple partner. The primary aim was to fast-track the mainstream adoption of Societe Generale's euro-dominated stablecoin. Similarly, the French bank also announced the launch of USD CV, a US dollar-pegged stablecoin. This new stablecoin will be available on both the Solana and Ethereum networks. Notably, this move positions Societe Generale as the first major European bank to issue a dollar-backed stablecoin on public blockchains. USD CV will be issued through SG4, Societe Generale's digital asset division, which specializes in blockchain-based financial solutions with the products already in place, creating a dollar equivalent in the next logical move for the bank. Recall, the crypto investment products recently saw record-breaking inflows 2 weeks ago, marking the 14th consecutive day of gains. According to the reports, and global crypto ETPs recorded $4.4 billion in inflows that week. ETPs are actually doing quite well for themselves inside the European market space. Societe Generale, a massive bank, decided to join the crypto space. Massive. It brings a lot of liquidity to the table, especially in the European market spaces. Brilliant for all of us to put it out there. Now, a very unexpected situation happened. Binance, who is a competitor to Coinbase, decided to partner with Coinbase's best friend, which is Circle. Binance and Circle, two giants of cryptocurrency industries, have depended their collaboration integrating Circle's yield-generating asset USYC as collateral for Binance's institutional clients. This move marks the latest step in a strict partnership between Circle Internet Group and Binance. Circle was previously known for its close ties to Coinbase only. With this new integration, Binance's institutional users will be able to use USYC token as collateral for over-the-counter derivatives transactions. USYC shares a similar structure to BlackRock's tokenized market fund built. Furthermore, USYC will be issued directly on Binance's native blockchain, BNB chain, giving users easier access to on-chain financial applications. Catherine Chen, the head of VP and institutions at Binance, said in a statement today, "We are committed to building secure, accessible, and capital-efficient solutions for institutional investors. The integration of USYC into the Binance trading environment is a significant, essentially, demonstration of our support for the future of capital markets." Circle recently integrated USYC into its platform through its acquisition of Hashnotes, a tokenization startup launched by Cumberland Labs. According to data from Real World Assets, approximately $686 million in assets are represented on-chain through reserves and repurchase agreements, largely based on US government bonds. USYC acts as a bridge between tokenized cash and treasury bonds, offering near-instant convertibility with Circle stablecoin USDC. It also used a yield-generating collateral option on crypto exchanges, custodians, and in transactions with prime brokers. So, Binance and Circle coming together. Circle only worked very, very tight with Coinbase, but now they're also working with Binance. Is this the early signs of Tether slowly drifting away from Binance? Now, moving on to China. But before we talk about China, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions or comments, put it outside the comment section. More than happy to read them out for you and give you a response. So let's go inside the comment section first, and then straight we're going to Chinese news. Let's see where we're at. Let's go. We were here. You jerk, get off the live. We love you, Miles. Stormy, thank you so much for the kind words. Let's see where we're at. Why Gary couldn't define ETH was a ETH getting a free pass. I agree. An idiot. I agree. Hi, when can we expect the crypto markets where can we expect to see the crypto markets next 3 months? Anything possible in the next 3 months. One of them being essentially the Clarity Act getting passed through the Senate, which is the final vote for it to become law. And then also the anti-CBDC Act, and also the case getting dropped, and also the XRP ETFs and other ETFs, also in the basket ETFs as well. A lot of things can happen in 3 months. Now, China. China releases US debt. Bitcoin gains ground right now. So China releases US debts and Bitcoin goes up, which means the crypto market follows its footsteps. China remains indifferently to threats and continues to dump American debt at the risk of provoking an ire of the White House. Bitcoin lies essentially in the wait. The United Kingdom has suppressed China as the second largest global holder. The United Kingdom has surpassed China as the second largest global holder of US public debt. The English ally now holds $779 billion, partly taken in place of the BRICS, which are essentially offloading their holdings. China falls back to third place with $765 billion. Japan remains the top holder with $1.1 trillion. BTC USDT charts from TradingView note that the increase in British holdings is not due to trade surplus, as essentially the case for Japan and China. London is a global financial center. It definitely is, especially the city of London is the capital of washing machines. Center serving as an intermediary for many multinationals, some of which are actually American. The same observation applies to the Cayman Islands, Luxembourg, Belgium, and Ireland. The dollar essentially reserves of these countries are completely decoupled from their GDP. China is essentially moving in the opposite direction after essentially peaking at over $1.3 trillion in US debts back in 2013. Its dollar reserves continue to decline. The Middle Kingdom essentially has notably shifted towards gold and European bonds, and although China purchased $23 billion in treasury bills in February, it was not enough to offset its maturing holdings. So, China's gradual withdrawal reflects a rising geopolitical tensions and concerns among the US fiscal situation. Tax revenues are expected to reach $5.2 trillion in 2025 against the expenditures exceeding $7 trillion. Meanwhile, pressures in mounting on the essentially Fed chair, suggesting Republicans have chosen the easy way out. Donald Trump is certainly eyeing a new contour of essentially easing method right now. Moreover, China has taken note of the EU freezing 300 billion European essentially dollars, 300 billion euros of Russian reserves. How long before the US does the same with China? This is why the United States is imposing custom taxes and fueling the flames of the war in Ukraine. Ultimately, the aim is to deter the BRICS from de-dollarizing too quickly. The following essentially charts, in partly because of the problem that the central banks have accumulated a lot of gold in recent years. Gold remains a universal currency for storing value in the long term. But the yellow metal does not allow for smooth trading, far from it. Bitcoin could collectively easily integrate into financial markets such as St. Petersburg International Essentially Exchange, and so can XRP, to be fairly honest, much more better. Volumes are today large enough that transaction fees have shrunk over the years. Certainly, Bitcoin is volatile, but the Lightning Network and stablecoins allow mitigating this short-term exchange rate risk. Why go through hurdles when you could just use the XRP ledger? Stateless, impossible to freeze, and existing is absolutely limited quantity. Bitcoin is tailored to become a top national currency. This is why the United States want to accumulate as many as possible before the rest of the world. It is about hedging against a currency that would allow the world to trade on equal terms. Donald Trump knows that the United States will sooner or later have to give up their essentially privileges to reduce the trade deficit, but better late than soon, because the essentially de-dollarization situation that's going on is not done by essentially D-cells. Perhaps the United States will essentially sort it off the rest of the world, lets them accumulate enough bitcoins to cushion the de-dollarization. Let's be optimistic. So China is dropping its US debts to, annoy Trump, let's just say, in a sense, in the easiest way to put it. Trump has been putting quite a lot of pressure on China, and China is actually on the sidelines dropping US debt. Who is buying US debt is still the United Kingdom. The United Kingdom is climbing the ladder on buying US debt. So while China is dropping US debt, the UK is buying it back up, so nothing happens to the US economy. China has always wanted to replace the US economy. Is it going to be able to do it or pull it off? Time will tell. Now, moving on to Tether. And interesting news regarding Tether. Tether is thinking about entering the US markets because they know for a fact that if they stay outside of the US, they're not going to be approved in the US. So USDT, the same way the EU kicked it out, America will also kick it out. But the difference is with the United States said, if we don't accept an American stablecoin, a digital dollars, and we say you're not allowed to use this digital dollars, it's banned in the US. No other country is allowed to touch it because they might sell it to American citizens. So the EU banning USDT was just the EU. The US banning USDT means goodbye USDT. Because the US said, if we ban an American digital dollar stablecoin, then that means they're not allowed to sell it even outside of America because American citizens might be able to buy it. And that token might be at risk of depegging, for example. So Tether obviously realizing that, they have to become some way compliant. Otherwise, it's goodbye Tether. Tether's CEO has reportedly announced plans for the world's leading stablecoin, USDT, to enter the US markets. Essentially, the move comes shortly after signing into law the Genius Act by essentially Trump. According to reports by Bloomberg, Tether's CEO revealed that the company was creating a domestic strategy to comply with landmark legislations. Further reports indicate that stablecoin USDC maker Circle was also making similar plans. To be fair, Circle is going to get accepted because it's an American, essentially, it's headquartered in the US. So Circle is not going to get rejected. Neither is Ripple's RLUSD. Tether's USDT is definitely going to get rejected if they don't pull any sort of strings. Tether's plan is to enter the US stablecoin market signals a departure from company's 2021 retreat. The firm was required to pay. This is what's going on with Tether right now. So this is something that most people know or most people don't know about Tether. And I've shared this once, a very, very long time ago, regarding Tether and their fraudulent behavior. But here it is again. Just as a little reminder, if you do know it, if you don't know it, you're about to know it. Tether's plan to enter the US stablecoin market signals a departure from the company's 2021 retreat. Now, you might be thinking to yourself, what happened in 2021 with Tether? Well, the firm was essentially back then required to pay fines exceeding $60 million. Why was Tether fined $60 million by the US back in 2021? It was due to regulatory issues inside the United States. What regulatory issues, you might be thinking to yourself? The New York Attorney General's office barred the company Tether from operating locally after reportedly making false reserve claims. Back in 2021, Tether lied. It made false claims of what's backing USDT. And once the essentially New York Attorney General's office found out that Tether lied about its reserves, they fined them $60 million back in 2021. So when people have suspicions of Tether printing out of thin air, it makes sense, because if they lied once in 2021 and made false claims, that's fraudulent behavior right there, of you saying, we have this much gold and this much cash and fiat currencies and US bonds backing our USDT. And the fact of the matter is, you don't. The regulatory agency, the Commodities Futures and Trading Commission, CFTC, also fined the firm for misleading the public about the stablecoin's backing. So, the New York General Office sued Tether for false claims for $60 million. The CFTC also went after Tether for lying to the public about what's in their reserves. And this was back in 2021. But Tether did a good job of keeping the wraps on it, because most people still don't know that till this day. So honestly, when people say Tether just prints out of thin air, it might possibly be doing that still. According to the report, Tether will create, here's the beauty of it all. Do you know why I say Tether might still be printing out of thin air? Because Tether, USDT, is not going to be bringing out their USDT. The same USDT Tether has, they're not going to be bringing it to the US. Oh no. Tether wants to create a new stablecoin for the US. Now, why would Tether go through the trouble of creating a new stablecoin for the US? Why not just use the old stablecoin, USDT? Is it because if you enter USDT into the US under essentially legal requirements, the New York's General Office, the CFTC, the SEC, they're all going to look under the hood and realize, hang on a minute, what's backing USDT? So is that why Tether is going to be creating a new stablecoin for the American markets? Why not just use the old one? What are you hiding from the public? The firm's flagship dollar peg, according to the reports, Tether will be creating a new stablecoin, USDT, the firm's flagship dollar peg token, which will be fully compliant with the Genius Act. The new law includes essentially status that outlines the requirements for foreign issuers targeting US stablecoins markets. Tether's issuance to stablecoin USDT from its neighboring location, El Salvador, and this is what Tether's CEO said: "We'll be working very, very hard to make sure we comply with the foreign issuer pathway within the Genius Act. It's crazy that sometimes people think Tether will not comply." I'm sorry, what? Just to repeat that one more time. Tether's CEO said, "We'll be working very, very hard," I'm guessing to build their new stablecoin that actually might have reserves, "to make sure we comply with foreign issuer pathways within the Genius Act." And he goes on to say, "It's crazy that sometimes," this is Tether's CEO saying this, by the way. Tether's CEO says, "It's crazy that sometimes people think Tether will not comply." I'm sorry, it's crazy to think Tether won't comply. What happened in the EU? Did Tether comply in the EU? No. So how is it to assume Tether not complying is crazy? If you did it once, most likely you're going to do it. Tether didn't comply in the EU, so it's not crazy for anyone to think Tether won't comply because they didn't in the EU. And also, it's not crazy to think that Tether is just printing USDT out of thin air because they were fined by the CFTC and the New York General, essentially the New York, and from the essentially the New York Attorney's General Office back in 2021 because they lied about false claims of their reserves. And the CFTC said they lied to the public about their reserves. So no, we're not the crazy ones, Tether. And it's just ridiculous for Tether to even come out and suggest that the retail section of the crazy ones. We're not crazy, Tether. You printed out of thin air and got fined for it. That's a fact. You were barred from the EU. That's a fact because you couldn't become compliant. So we're not the crazy ones. Honestly, how dare does Tether CEO come out and say, we're the crazy ones that were thinking Tether won't comply, but you didn't. And that's a fact. I don't know what Tether CEO, does in his spare time or takes in his spare time, to be fairly honest. The fresh focus by stablecoin USDT maker Tether comes amidst the growing competition with Circle and other stablecoins. However, the signing into law of the new act, which prominent crypto executives include, essentially Tether's CEO has opened a new chapter. He also went on to say, we have 3 years to make sure this process can go through properly. We are going to be very precise and very dedicated to that. Maybe just back your stablecoin. It's very simple. And maybe move your headquarters to the US. But you won't do that because then you'll go under scrutiny for lying to the public for all these years. And get sued again. And get fined again. By helping to normalize the US stablecoin market, the signing of the Genius Act will, for the first time, help introduce stable trading into mainstream financial markets, which is facts. But wow. Tether's CEO saying essentially that we are the crazy ones for thinking they won't comply, even though they didn't in the EU. And we're the crazy ones, even though they've been sued for lying to us about their reserves back in 2021. And we're the crazy ones. It's an interesting analogy that Tether's CEO has. Now, honestly, I can't wait for more regulations so that the fake actors inside the crypto space can just disappear. One of them being Tether's CEO. Honestly, I just can't wait for more regulations because what regulations will do is create a bubble of genuine crypto companies and a bubble of fake actors. And we all know where Tether's CEO is going to be standing. Now, strategy and the decoupling is what I'm looking forward to the most. Strategy expands preferred stock offering to $2 billion. MicroStrategy is about to be buying more Bitcoin. As usual, business and strategy. Business intelligence firm turned Bitcoin treasury company Strategy has reportedly increased its preferred stock offerings to $2 billion, up from its previously planned $500 million, as it continues raising capital to fund additional Bitcoin purchases. The Series A stretch preferred shares were priced at $90 each at noon Eastern Time on Thursday and carry an initial dividend essentially of 9%. Citing essentially anonymous sources from Bloomberg, essentially Bloomberg reported on this matter. This update comes just days after Bloomberg first essentially revealed the preferred equity sale, which at the time was expected to be marketed between $90 and $95 per share. As Cointelegraph reported, the offering includes 5 million preferred shares. The deal essentially is being underwritten by several major institutions, including Morgan Stanley, Barclays, TD Securities, and essentially Strategy's common stocks trading under the ticker MSTR. It remained largely unchanged on essentially today, trading at $413. The stock has rallied 37% year to date and over 146% in the last 12 months, pushing essentially the company's market cap to around $116 billion. MSTR has significantly outperformed both the S&P 500 index and its information technology sector, each of which has gained roughly 17% over the past year. It's no surprise that Strategy's share prices have moved in tandem with Bitcoin, which has set multiple record highs since 2024. The rally has essentially been fueled by surging institutional interest through ETFs right now, growing regulatory approval, and raising corporate treasury demands, and Strategy remains the largest corporate holder of Bitcoin by wide margin, with its success promoting other companies to adopt BTC as a part of their treasury strategy. According to industry data, the top 100 publicly traded Bitcoin treasury companies collectively hold 917,599 Bitcoin. In total, all public companies combined own 918,108 Bitcoins, with strategy alone accounted for 66% of the total holdings. The latest essentially company to make this significant move into Bitcoin is also Quantum Solutions, which we talked about beforehand, which is the Japanese company. But MicroStrategy is about to be raising more money to buy more Bitcoin, so business as usual at Strategy's firm. Let's see what's going on inside the comment section before we go through the next news. And the next news is regarding the new lawsuit that's happening inside the Fed right now. Morning, Miles and CMF. Shelly, good to see you as well. Morning, how you doing? How you been? USDT doing too much. I agree 100%, Ray. Now, new lawsuit. To make the FOMC rate meetings public compounds, Jerome Powell's problems have started. So, today there's been a new lawsuit on the Fed, believe it or not. And it's to make the Fed more public. So, today, Arizona Capital, a money manager, has sued the chairman, Jerome Powell, and other central bank policymakers in Washington, D.C. in a federal court, by the way. The lawsuit alleges the Fed is violating a 1976 federal law by keeping its monetary policy meetings behind closed doors. In its lawsuit, Arizona Capital asked the courts to issue a temporary restraining order that forces the Federal Open Market Committee to make its meetings public beginning next Tuesday and Wednesday, when central bank policymakers meet in Washington to decide on the next move on interest rates. It should be. I mean, for crying out loud, it's called the Federal Open Market Committee. Why are they doing it behind closed doors? And according to United States laws, there's actually a law that essentially the Fed has been violating for the longest time. In 1976, essentially federal law, which states essentially the Fed is not supposed to be doing their open, essentially, market meetings behind closed doors in any sort of a way. Arizona Capital is run by CEO James, who essentially is close to Trump's administration. You can see where this is going. The man that's suing the SEC through his company, and the man that's suing the Fed chairman, Jerome Powell, through his company in Arizona, is also a man that's very, very close friends with Trump. He used to work as an assistant for the Department of Government Efficiency, DOGE. You can also see where this is going. According to the fund manager, by operating beyond public scrutiny, the FOMC is deliberately undermining the public's accountability envisioned by Congress. And that if the firm such as Arizona does not have real-time access to FOMC deliberations, it cannot fully consider and protect itself against Federal Reserve policy shifts that can create volatility. They're saying is basically that, why does the Fed have closed-door meetings with bankers? Because we don't know what they discuss, and what they come out with on the news afterwards could be something quite different. They might be talking about manipulation. Not saying they are, but they could be. And that it's better for that meeting to be open. In addition, Arizona says it is deeply concerned that the FOMC under Chair Jerome Powell is maintaining high interest rates to undermine President Donald Trump and his economic agenda, to deteriorate of the American citizens and the American economy. The company also said that the FOMC's current policy stance appears politically motivated. I've said this for the longest time. As much as Jerome Powell wants to state he's not a politician, he doesn't stand with political groups, and is a neutral party because he's the Fed chairman, BS. Jerome Powell stands with one party, and it isn't Trump's party. He stands with Pocahontas. Since Trump took office, the FOMC has not changed interest rates because many lawmakers say they need more time to determine how Trump's trade policies will affect inflation. This is something Trump has criticized Jerome Powell and the Fed many times. According to him, the rates should be 3 percentage points lower. A person who knows about the situation says that James told the administration about the suit before it was filed. James, who used to also work for the department of essentially the Doge department that Elon Musk created to go after the liberal and conservative, the Democratic Party for all their misbehaving and mismanagement of funds. This man used to be a part of Doge. He also has a company of his, essentially of his own in Arizona, which is now suing the Fed chairman, Jerome Powell, for keeping certain meetings private when they should be public under US laws. especially is requesting the banking meeting that's about to be happening, it should be public. And I think it definitely, honestly, in my opinion, it definitely should be as well, because I know for a fact those banking associations or bankers are going to be telling the Fed how we're going to slow down the progress of blockchain fintech companies getting banking licenses. Because they're already weaponizing the banking associations to send a letter to the OCC to slow down Ripple and Circle's progress. So we should know what happens behind those closed doors, not after the meeting is done, but during the meeting. Now, moving on from this brave man that's decided by himself to sue Jerome Powell and the entire Fed through a federal court to XRP. XRP emerges as the most bought crypto on Coinbase, aimed bulls regaining the $3.20 level. So XRP was the number one essentially bought token in Coinbase right now. According to market analysts, XRP's volume is number one on Coinbase right now. That shows it has more buyers than any other asset, but essentially by far. Right now, retail is essentially clearly buying the dip. XRP leads Coinbase buyers rankings with 101,000 essentially participants, surpassing Ethereum and Bitcoin at 88,000 and 87,000. Solana comes at a distant fourth with 32,000 buyers. Spotlight has already been taken by XRP with 101,000 participants. Therefore, XRP continues to dominate Coinbase's buyer charts, backed by a compelling mix of technical momentum, institutional legitimacy, and renowned confidence in utility. Intelligent people will be going for XRP because they know that the utility of XRP is far more superior than any other token out there. Regulatory milestone in ETF buzz. Ripple's long-running legal essentially battle with the SEC concluded earlier this year with the withdrawal of the cross-appeal, fueling enthusiasm around the potential of a spot XRP ETF, and a confirmation from Ripple's CEO Brad Garlinghouse that the case is fully settled, added credibility, opening the doors for institutions that previously steered clear of XRP. 2. Surging market momentum. XRP surged to $3.65 in mid-July, a fresh all-time high fueled by essentially present momentum and renowned investor confidence. This price action attracts both short-term speculators and long-term believers looking to capitalize on the breakout. For instance, XRP surged to around $3.23 despite dropping psychological price to $3 early today. 3. Broader crypto essentially market tailwinds. The broader cryptocurrency landscape remains bullish. Bitcoin hits its historical highs above $122,000, while Ethereum posted notable recoveries, all reinforced by positive on-chain metrics and macroeconomic catalysts. XRP's leading essentially ranking underscores how it's benefiting from all this bullish wave. 4. Diverse retail interest. Coinbase's buyer statistics reflects genuine retail diversification. The XRP lead suggests that it's drawing interest across varied investor types, from allocators reacting to the regulatory wins to traders chasing the short-term technical breakouts. 5. Network activity and utility narrative. Unlike many purely speculative tokens inside the crypto space, XRP's cross-border payments functionality, especially after compliance and improvements, resonates with on-chain analysts. This practical use case strengthens its appeal relative to more speculative alternatives. XRP topping Coinbase's buyer charts with 101,000 entrants is proof of its essentially reassurance and credibility. Regulatory wins, ETF potential, and strong price performance make it the talk of July 2025. After reaching the new high records of $3.65, a scenario that's seen in the last 7 days, Ethereum and Bitcoin boost larger market caps, but XRP's current trajectory is demanding attention from retail and institutional investors alike. And to add on top of that, Ripple's CEO confirms USD rated most trusted stablecoin by Blue Chip. Keep in mind, USDT is the number one token out there, and USDT could have been essentially awarded the most trusted stablecoin. USDC could have been awarded the most trusted stablecoin. but it wasn't, because USDT lies about its reserves and USDC depegged once. RLUSD is much more secure as a stablecoin than these two combined together. So, Ripple's stablecoin RLUSD has secured the highest possible rating from blue chips, signaling strong public trust and market confidence. The rating recognizes RLUSD's robust financial backing, regulatory compliance, and strict partnerships. The rating essentially strengthens Ripple's position in the global stablecoin and cross-border essentially payments markets. According to Ripple's CEO Brad, RLUSD received an A rating approval from blue chip, highlighting its low risk profile across multiple categories. Blue chip assigned a stability score of 0.91, a governance score of 0.86, and a management score of 0.84. These scores place RLUSD in a very low risk basket across all key performance indicators. Ripple's essentially ongoing partnerships with major financial institutions have further strengthened the stablecoin's market viability. Among them, Ripple's collaboration with OpenPaid ensures direct minting and burning of RLUSD tokens. This integration supports smooth liquidity management and enhances operational efficiency in the stablecoin ecosystem. Ripple's credibility stems from its cross-border payment infrastructure developed over several years. Dozens of financial institutions currently use Ripple's network for institutional settlements. This broad institutional usage contributes to RLUSD's growing acceptance and reliability because Ripple built relationships around the world with massive institutions and banks. Ripple's partnerships with BNY Mellon has further bolstered RLUSD's security and framework. As a custodian, BNY Mellon manages essentially US dollars reserves backing RLUSD, so we always know for a fact that something is always backing RLUSD. Not much can be said for Tether. Ensuring all essentially full categorization, this custodial essential relationship adds another layer of credibility to the stablecoin structure and future. The recently passed Genius Act provides greater legal clarity for stablecoins like RLUSD inside the United States market space. The law supports the dollar dominance backed by digital assets. RLUSD benefits directly from this framework, giving it regulatory legitimacy and global appeal. Now also that blue chip has rated RLUSD A, a rating of A, which means top-notch. Market data shows that essentially means low-risk asset of any sort of situation, depegging situations, reserve situations, low risk completely. Market data shows that Ripple's USD records daily average volumes of $763 million, signaling strong demand. Its current market cap is around $557 million, reflecting increasing adoption and investor interest. This trend contributes to Ripple's broader ecosystem expansion. As RLUSD usage grows associated with XRP, on-chain activity also surges. Ripple's network burns a small amount of XRP with each transaction, gradually reducing its supply. This deflationary effect is contributing to the bullish outlook for XRP also. Recent data indicates that large XRP holders have accumulated over 280 million coins in just 10 days. This activity coincides with RLUSD's increased market presence and demand, and analysts link these developments to a potential parabolic rally for XRP. RLUSD received an A rating from Blue Chip, indicating very low market risk and high trust from public. Blue Chip assigned RLUSD a stability score of 0.91 for governance, score 0.86 for management, and a score of essentially 0.84 for its other aspects. Also, Ripple partnered with OpenPaid for direct minting and burning RLUSD to ensure efficient liquid management. BNY Mellon serves essentially as the official custodian. All of these things add credibility to RLUSD, Ripple, and XRP. So, on the note that XRP brought in more volume, and also on the note that RLUSD just got the highest rating for a stablecoin, we have came to the endings of tonight's live. If you're watching this for the first time ever, this was called the CMF Live. It's episode 341 of this. Essentially, this is episode 341 of the CMF Live. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live show Monday to Friday, 10 p.m. London time, where I share the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding how this world essentially is heading towards a digital future. So if you want to have a better understanding about cryptocurrencies, tune into this live Monday to Friday, 10 p.m. London time, and tune in for episode 342 tomorrow at 10 p.m. London time. If you followed me and subscribed to me during this live, thank you so much for following and subscribing to me during this live. If you liked, comment, and retweeted this live, thank you so much also. If you haven't, CMF members, liked and retweeted this live, please like and retweet this live. If you follow and subscribe, turn on your bell notifications. I'll be seeing everybody tomorrow, same time as usual. But before we do go, let's go start the comment section first. Let's see what's going on there. And then we'll essentially call it tonight. Not that market cap matters anyway. Facts, it doesn't. Market cap never matters. Essentially for utility purposes. And it's not just for XRP. In general, any crypto project that has utility purposes, market cap doesn't really matter, because it won't be able to grasp what's going to be happening. Good night, Miles, and all CMF. Thank you for great live and news. Let's go, JP. See you tomorrow, brother. Same time as usual. Let's go, Peg. Thanks, Miles. No problem. See you tomorrow, same time as usual. Night, Miles and CMF. Pablo, see you tomorrow, same time as usual as well. Good night, Miles and CMF. See you tomorrow. Orphan, see you tomorrow, same time as usual as well. Good night, Miles. Callie, see you tomorrow, same time as usual as well. Miles, do you recommend books and docs? Yes, I do. Documents, I definitely do, for you to read out. Yeah, I share documents inside a Telegram group as well. Good night, Miles. Michael, see you tomorrow, same time as usual. Nice work. Let's go. Have a great night, Miles. Thanks for doing these lives. See you tomorrow, different time. As I'm working, so I'll watch later. No problem, autistic. I'll see you tomorrow, different time. I will be seeing everybody tomorrow, same time as usual, at 10 p.m. London time. Some of you might tune in a bit later due to work. See everybody tomorrow, same time as usual, 10 p.m. London time onwards. Good night, Miles, and see you tomorrow. Funky brother, see you tomorrow, sometimes as usual as well. Night all, great show. Let's go, Susie. See you tomorrow, sometimes as usual as well. Like, comment, share, retweet. If you already haven't done CMF members, please like, share, and comment and retweet. It does show me, essentially, I love it when people, like, comment, and retweet. It goes a long way. Okay, thanks. Where can we find you on Telegram? D, put a comment outside the live, and D, on YouTube. If you go to my About page on YouTube, the Telegram should be there. If it's not, put a comment outside the live on YouTube in the comment section, and I'll reply back to your comment. No problem. See everybody tomorrow, same time as usual, 10 p.m. London time onwards for the next episode of CMF Live. Tomorrow, episode 342. Good night, Miles, the CMF. Great live. See you tomorrow. Friend forever. See you tomorrow, same time as usual. Good night, Ma. Good night. Thanks, D. See you tomorrow, same time as usual as well. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're on. CMF, see you all tomorrow, same time as usual. Like, comment, share, retweet, follow, subscribe. See everybody tomorrow, same time as usual. And also follow the communities page, also on X. See everyone tomorrow.